Hey, what's going on, everybody? Just closing out the week. I want to do a recap, kind of my thoughts on markets, mostly global macro, and then we'll hit on the charts, how we went out. And I'll just do a quick recap of kind of the trading we did today. I haven't been able to get to do a whole lot of our usual day trade room recaps just because I'm traveling, so the light's kind of annoying, but this is the best I could do. Uh, so let's just get right into it, and then I'll also just share with you guys how you can couple of the specials we have going on with the uh, to join the live trading room. And then if you're interested in joining any of our prop team or like our options service, all that good stuff. So I think the biggest thing, well, if we recap the week, so we came in and we've been bearish, but we go both ways, and we're trade the model where you got multiple durations. So you might have a bias to the downside, and we're bearish growth, and we have been we've been all over the recession. We've been all over the down cycle. In December 1st, totally caught Wall Street off guard. And then we were all over it here, coming into the highs with the business cycle in January and February. And then now here we are again with, I don't like to listen to the financial media a lot, but I will get a feel for what's going across the tape, and then what just some sentiment of what everybody's thinking and some of the common themes. And so what I heard a lot this week was still the optimism around, as soon as everything opens up, there's going to be pent up demand and people are going to go back and blah 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 blah. Well, the reality of the situation is, you might have a lot of people that have been pent up in their home and they want to go out and do this, that, and the other. But two things: you have people that want to go out to bars, restaurants. Problem is, what happens if half of them or a quarter of them aren't open for you even to go back? So wanting and actually having the demand or having the place to go back to, nobody's talking about. And then the other thing is, you might want to go do all these things, but you might not have the means, or you might not have, if you're out of work, you're not going to go spend like you would normally on a weekend. The confidence is not there. And it's all the same things. It's the same thing you're going to run into with consumption. The same thing we're going to run into. The longer we go down the road, the less those narratives are going to play out, because you need more and more of that same thinking to push the market. So the amount that we've rallied off the lows, the market's priced in all the liquidity, the Fed, all this trillions of stimulus. From here, for the market to go higher to new highs, you're going to have a whole nother round of everything we just had. That's very low probability. So in addition to the cycles and the setups that I'm going to go over here in a second, that type of sentiment, that we had the liquidation, now we had the optimism in the bounce, and now we're at the tail end of that. And what you're going to see, again, as we go through time, there's going to be more solvency issues. There's going to be a lot more reality checks that the market's going to have to shrug off. And it's no longer going to be, well, the Fed's got our back. They've already done a bunch. And so you're not going to force any more. You're not going to force the Fed's hand until stocks go down. It's always stocks down first, then the Fed panics, reacts. We've rallied. If you're going to think that this is just going to continue, no, it's down again, and then the Fed's more willing to do something, and then Congress is going to be forced to act. When the stocks are back up and everybody's like, oh, we did what we needed to, and they're all thinking you're going back to new highs, it's not going to happen. So that's just kind of a false belief. That's what I picked up. And then the other thing that the market's not paying attention to until today was Hong Kong and China. So all those issues haven't gone away. And we talked about it Tuesday, Wednesday, the dollar shortage, the problem that China has. And one way that they get dollars, because they just can't turn around and tap the markets, one way that they get dollars is they go through these investing, they go through the indices and they use investor capital. So that was unfair for them to be able to just tap our markets and then not have to not have to abide by the regulation and the tax rules and any of that. So that's finally come to an end, and that's gonna really mess with them anymore. They're gonna even have less access to dollars. So that's gonna matter on dollar versus the yuan. It's gonna matter on dollar Hong Kong peg. And so you're getting to that. We're slowly getting to that point. I think we're gonna see. You can see the dollar really start to take off for a number of reasons. So we're still dollar bullish. I think the Asian currencies are going to start to crack. You kind of saw it today. So we'll see if we get more follow through. And then I think the story is not going away. You basically had China come in and has taken over Hong Kong, and the media is acting kind of like it's just they're putting these names behind it. The security, they said they've come in and they've arrested people. The leadership, it's basically been taken over. And this is going to be back in the forefront, it sounds like, of the news cycle, which is bearish on the margin for risk. All right, I'm gonna take me down just because last time I had it, I minimized it and then it was stuck right in the middle of the chart. So hopefully I get this out of here. Okay. Let's touch global macro, then I'll just highlight what we did. So on the right, I'm supposed to take that off. I don't want all our trades on here. It's hard to see. All right, so let's start with the dollar. You get the dollar right, you get a lot of other things right in markets, especially global macro. Okay, still long-term bullish. We've talked about this trend for a while. Our call, basically, we've been dollar bull since 2014. It was a pretty clear breakout. This was a trying move for the bulls. We actually held high exactly on the weekly. I've talked about that a million different times. That's one of our most powerful concepts. Held it again here this year. All right. So until you break the lows here, there's no reason to be dollar bear at all. Now, if intermediate term we were to break down from the 200 all these lows, that from a trade standpoint that absolutely matters. We would have to play some defense, and that's going to affect some swing trades or an intermediate term time frame. But I'm just saying the long-term bull market in the dollar is not over until you start breaking some major levels that are well below the market. And other than that, I mean, this is the range we've been in. You're looking at dollar index 98, 99 to 101. It's just been ebbing and flowing with the daily cycle. We come into next week. Now we got the long weekend, but into next week, you got dollar cycle up again. This week we came in, it was dollar cycle down. So we rallied. Here's the euro, the opposite. You rally the euro down dollar into 200 again. So we waited. We covered a lot of shorts 2 weeks ago on a core short. And then we come back in on the euro, made some sales the middle part of the week. And then this morning, this morning you got a chance to book a good amount of gains. We did that a pretty decent day, not a whole lot of risk on euro. Here's dollar long, Aussie, dollar peso, more euro. So that was well done. Just stick with the process. This daily cycle has been amazing. I had a little bit of a wiggle here as we kind of held this trend line. And now you're smack right in the middle of this range again, this intermediate term range. So I'm still a better seller into next week. And I think this euro cycle is going to cycle down. And again, that means dollar up. That's all a hit on as far as commodities. It's going to be everything else, Aussie dollar, New Zealand, again, the Asian currencies, pretty much everything else is going to be the opposite of. If we got up dollar again next week, then everything else is going to be weak. I mean, especially emerging markets are a disaster. I guess I'll go to equities next. So important to note, this week was the top of the 8.6 cycle on the weekly level. So we had pretty much a perfect 8.6 week cycle count into the lows that we follow this cycle, right? This is what we do on our cyclical analysis. Bottomed, depending on where you want to start the week. whether you want to start the intra-week low as the first count, or you want to start the second bar here after the 9 count low. You know, it's all relative. Is it 8 weeks? Is it 9 weeks? The frequency is 8.6. So sometimes it make a high on 8, sometimes it's 9. And look at this ebb and flow here. And then you get cycle inversions too. We're up 9 weeks, follow through another 9 weeks, made a high, dip. That was a half cycle. Came back down into low 8 weeks later, another half cycle, another low 8 weeks later. 2 cycle inversions, started another count, boom, 9 weeks into the low, bottomed exactly. And here we are coming into this week again. It was 9 weeks. So I still think we got a good shot just from a timing perspective to top out here this week. We'll see what next week brings. And then that's the cyclical standpoint. In addition to the oscillation or the stochastic is high on the weekly level, and the daily level, you're coming into the long weekend with a high cycle also. So this is, if you got dollar up and you have equity risk like this, cycling high, pretty good chance that we have risk off into next week based on that. Then when you look at price, it's kind of I have a lot of regressions on here. But we started to stop making higher highs. That's always the first sign the market maybe is going to turn. You got to stop making higher highs. We did that, put in kind of like a triple top. So we did 3 times this week. You need to crack the 8. You need to start making lower lows in the intermediate term. That would be what we call phase 3. And then you're failing at pi, all in this location. The 200's obvious. Everybody's had 3,000 as a level. I'm sure the options guys and the convexity guys and the gamma guys are all focused on that 3,000 level too. So maybe we need to tag that Sunday or Monday and then come off again. We'll see. This is an area though, so we got to work the area. And how we're playing it is like this week, there was lots of opportunities, day trade long. We've had some core longs and S&Ps for the intermediate term, been making money there. And then it's slowly fading the Russell, slowly put out a couple shorts on the NASDAQ that I was able to like cover last night. Didn't re-short it today because they're just coming into a long weekend. But slowly setting up for the longer term shorts, but nothing heavy. You don't need to get heavy until we want to hit it and lean on it after it breaks the 8, after you get the intermediate term downtrend. We tried to do that 2 weeks ago when we went back through 2,800, but you held the low and you couldn't make that lower low. And that's a perfect example of you can just make a higher low and you'll be right back up. So that's how we work a contrarian bear market bounce. I would just follow us, join our trading team if you really want to get into how you do that more with working your size. You can see on the intermediate term, here's these highs I was talking about in front of 3,000. That matters for Sunday. 2,900 here is what I was focused on the downside. And then the big level is here, the low that we held. I think you got a lot of people getting short because we broke this low, and it kind of a lot of bad shorts in the market. They didn't want to be short here, but they want to short the new low. And that's classic. So that's getting squeezed. I still think you've got a lot of short position overall in the market if you look at CFTC futures and options positioning. All right, that's what I want. That's what I care about equities. It's going to be kind of the same for the Russell and NASDAQ and the Dow. I think that's a pretty good review. Hit on bonds, not a whole lot of action. I mean, we pretty much, I don't know if we just kill the asset class. Bonds don't really move. You know, rates where they are, it's just been sideways. It's kind of a shame. This used to be a great market to trade. So it seems like, I don't know, you're going to have to get stocks to really come up, I think. And then maybe we get another move to 0 on 10s. I get the whole real rates rising and the idea for negative rates, but the dollar is not strong enough. And I'm not convinced that we have to go negative or they want it to go negative, but it's been a tight range. So you buy the dips towards 38.5 on 10-year futures, take some profit. We've done that a few times this week. It's pretty much a range trade. I did actually short 30s, and I told my guys this today, because there's so much supply coming, all this debt we're gonna have to issue. And then any whiff of inflation, that's gonna probably be a headwind for the long end also. So I'm gonna play core long in tens, and then this doesn't have my most recent trades for some reason. Anyway, there's a couple ways to play that. If you guys join our options team, I talked about playing TLT calls versus shorting some inverse ETFs, which is the same way as like playing long tens and short 30s. Wrong account. I don't want to play with that because I don't. When I do that, it shows the account number. So anyway, long bonds, gold this week. Give me a second here, guys. Let me try to fix this. I don't want to see if it's the software that's not showing the signals all the way. Sometimes there's like a lag on Thinkorswim, or got the wrong account. It's not refreshing all the way. All right. Well, anyway, I sold. We're buying. This is annoying. We were buying these dips in here, sold into 1770, and then I did buy and nibble a little bit today back, and we kind of got that pop. But anyway, gold's bullish, and just keep buying dips. So there's actually a pretty good wedge. The market broke out this week, and then it hasn't actually taken off just yet. I mean, the dollar was kind of, I don't know if it was dollar strength or just needed to take a little bit of a break. But just keep buying dips. I mean, this looks good. Unless we really break down, I have people asking me like, well, where's your stop? I mean, this trend has been in place for, I mean, this was the first move, second move. This is the third or fourth move up. And so you don't want to get bearish just because you have a pullback below the 8. I mean, until you break the bands or these, like, it's well below the market. I mean, you have to manage your risk on the, in between some of these levels. But unless you break these lows here on the weekly and monthly level, I mean, gold is just one of the best trends right now on the long side, and it's got plenty of reasons to go higher. So that's that. Treasuries I hit. FX, oil market, really quite the squeeze. I think, I mean, they didn't allow people to trade the front month, so I think they took away a lot of sellers. It was part of the reason why this backed up. But here's your weekly cycle back up here, coming in to next week and the week after. Daily cycle's high, so we've been kind of slowly fading it in the minis, and then I actually got heavier today. You had a chance to cover some last night, and then we had this little break. We had a break right here that looked like it was going to get some follow through right here. This was a pretty good swing line in our model, and it was just a shame that you couldn't quite get it. So I like this action. I think there's a good chance that we're going to get some rolling lower highs. The risk is obviously going to be above. We'll call it this week's highs. If you get above this week's highs, then it's paused. So I don't know if you guys saw that. I'm talking about oil. It said the sharing was paused. This weekly cycle, I was just saying, was high on oil. So yeah, the weekly oscillator's coming up, and then the dailies was high a couple times, and then it's back high here this morning. So I faded a little bit last night, and then I added today, and I liked this bearish action here. And then right here, it looked like maybe you're going to get some follow through coming off the top, and you just didn't get it. So the risk is above the high of this week. If we get above there, then yeah, there's a chance that whatever I added to yesterday and today, I'm going to have to stop on half of that risk, play defense, because then you might end up filling this gap, which everybody should have. Everybody will be talking about. Right now, we kind of filled in front of the gap at the low end of the gap, and sometimes that will be resistance. I think that's pretty much covers a lot, guys. The copper, we've been bearish. I had a good day today. That's part of the Asian growth slowing trade. So you just stay bearish there, pick your spots. It's failed at the top of the range, risk range, when you look at regressions and standard deviation. So today was a chance to cover some, which we did, made some money, go back to the short side of Sunday or next week on the bounce. And again, you got this cycles high, which bodes well for risk off move. So global macro, it's all kind of singing the same song, which is pretty common because everything's connected. Maybe one other thing, I'll just say Tesla, we've been trading around a lot because it's been pretty rangy. Had some good little intraday moves. Anytime we get back towards 815 or higher has been good sales. So you get up there in the morning, we sold it, we bought some puts, covered. Did it again on the open. Today you had some good, wow, it went out like shit. You had some good, I bought more puts up here towards 830, covered it on the open, and then I put them back out. When we got back up there, before I went for my run, 30-minute cycle was high, and then they smashed it again. So just keep trading that course short. I mean, this is just trading with the market. It's not going to take much. If equities roll back over, this is going to get absolutely crushed again, probably back to 600, maybe even a full pie cycle if equities go back to retest the March lows. So we were all over it when we were up above 900, and there's been some really good action. We've had some really good calls here. Short into the highs, covered. Short into the highs, covered. Sold into the lower high bounce, covered. Just kept the course short. I covered it all into pie, and then slowly back to the short side. And you'll get heavier. Depends what stocks do. If S&Ps get above 3,000, then NASDAQ can probably push, and everybody will chase it. And you could retest a 900 handle, and then I'm just gonna get more short, probably in my max short on this position up in that zone. I don't think we get there. I think I got a better shot at covering it back in the 700s on some, or selling out puts. All right, guys. So, yeah, listen, have a great long weekend. If you're interested in what we do, here's my chat room. It's free right now. I mean, it's $1. It's $1 to join our Cycle Edge room. This is all our signals across all the markets, swing trades, longer term positioning. I also give you access to my live room twice a week, Tuesday, Thursday. And it's basically like all morning. You're live with me. So you can ask me questions. We can see me day trade. I'm trimming different core positions, everything. So that's $1. I'll show you where you can jump on that in a second. This is our prop team. This is where we day trade every day. This is where I do all my coaching and mentorship also. So that's a whole program. We have an options edge group, which is where we do all our options trading. But if you guys are interested in, those are kind of the three main areas. And this is, we're using and partnering with a group for the prop team out of Chicago, Top Step Trader. And this is great, guys. Like, I would rather see you if you're new to trading, or if you even, it doesn't really matter your experience level. Why would you go sink in 150 grand into a futures count? If you can also have an account that, or trade with a partner that's going to give you more capital. So this is a $150,000 live account. You can trade a lot of futures here with that type of buying power. So spend the money join a team, learn a skill set, learn our entire institutional model, learn a skill set you have the rest of your life, invest in yourself, and then keep your capital and do. This is how anybody that trades on Wall Street professionally, you don't just put up all your money, you leverage it, you use another firm. Just silly to just only have a retail account. So this is what we do. I help you work through their program. You got to get through a couple of their combine steps, they call it, and then we get you live. And again, the details are here at topstepstrader.com. But sign up through me. I can get you a deal. And again, it's one thing just be on your own. It's another thing to learn the process and the model and have a team and somebody that has 15 years of experience trading alongside you, showing you, hey, this is what we did today is we came in, sold the Russell, covered, sold it again, covered, sold it again, covered. It probably kept it really simple. And then also took the long side of S&Ps on the other side of our Russell short. Essentially when we traded, I don't know if it's going to show it after the close. I was on the other side of, it was down at pi. Oops, sorry. So I just took 2 scalp contrarian long. So the market had rolled over on the near term, but we got here back towards pi, long, scalp that out, long, scalp that out. Pretty easy morning, didn't really push it in front of the weekend. But that's what we do in the prop team. Go to jenkinscm.com. And I got a deal going right now. I called it the economic crisis package because a lot of people out of work, a lot of people trying to figure out how to make extra income. They want to be free, don't want to have to rely on somebody else or, work for somebody else their entire life. The markets are in turmoil. Old Wall Street's getting you run over, absolutely getting people crushed. They don't miss the turn. They miss the turns. They miss the bear markets every time. So you want to capitalize on that. You want to protect your risk. You want to learn how to actually make money, whether you want to day trade or longer term. I made it as easy as possible. If you click here to our membership area, we have a chat room too, so you can come in and ask me questions about all this. Excuse me. So the cycle edge is basically like our real-time alerts. That was part of that chat room I showed you in a second. Options edge, this is all my options play. I teach you our entire model plus basics to options like covered call writing, but then I teach you how to protect your positions, hedging, and I teach you some of the real core positioning strategies we use, like back ratio spreads, which you'll absolutely never hear, probably never heard it ever on any financial media. A lot of traders don't even know what that strategy is. A prop program, some institutional stuff, but click here under the prop program, and this is going to give you everything. It's our prop program, my options group, my options course, my entire institutional model, my Forex course, my pi cycle trading secrets, intro to options, intro to Forex, but everything. The prop program alone was $5,000. The options program was $3,500. My model, if you just want to learn the course on your own, is $2,500. These individual courses range from $500 to $1,000. So it's the entire everything, guys. All my services, all my products is $2,500. And I'm not going to be doing this forever. So this is the best way to get yourself involved to make money in these markets right now. And the opportunities are going to be amazing as vol picks back up, which it will, because we're 1 month into a recession/depression. It's not over by any means. But you also need to learn how to manage the bull markets, or the bear market bounces, which we've had for the last couple months. Okay, that's it for me. Have a great, safe weekend. You guys have fun. Try to get out and be positive, raise the vibration. All this negative bullshit, it's having to listen to it and follow it all week long with the media and the mass and just never ending. So maybe try to get out, enjoy some nature. That's my plan. See you guys on Sunday.